Welcome back to another GT Homes exclusive. One of the questions we often hear is, what does it mean to co-sign a mortgage? Great question. First, let's determine why someone would need a co-signer. In early 2000s, a young family could purchase a decent home for $300,000. Nowadays, homes in the GTA are typically over $1 million, making it tougher for an average person to get approved for a mortgage. To deal with this issue, many people are choosing to ask their close family or friends to co-sign their mortgage. However, before you decide to become a co-signer or ask someone to co-sign, it's important to understand what this process involves. Let's start with the basics. A co-signer is someone added to your mortgage application to increase your chances of being approved. People usually choose this option if they get rejected by their lender because of a low income, bad credit score, or existing debt. However, they may be confident they can pay off a mortgage if given the opportunity. This could be someone young who hasn't had enough time to build credit, or someone with a lower income. Co-signing will not only give you access to additional credit, it can also give you access to a better interest rate and payment plan. Your co-signer should be in a better financial position than you and make up for what you lack. When you co-sign a loan, you vouch for the main borrower and agree to repay the loan if they fail to. Usually, the main borrower handles payments and the co-signer steps in if the main borrower misses a payment or defaults. However, both are equally responsible for the mortgage in the lender's eyes. The most common scenario is parents co-signing their child's loan. Adult children also frequently co-sign for their retired parents. Parents consider co-signing as a way to help their children during a major milestone, ensuring they succeed. Lenders find parents appealing because of their longer employment history and greater savings compared to their children. Other family and friends may also ask for help. Regardless of who asks, you should never feel pressure to co-sign. Take some time to carefully weigh the pros and cons of this decision before coming to a conclusion. To better understand the risks involved, ask the main borrower why they need your help. If they previously damaged their credit score, but now have a stable job and a lot of savings, co-signing may be worth it. However, if lenders reject them because of their poor money management skills and history of bad credit, it might be a bad idea to co-sign with them. Additionally, ask for your own copy of all the paperwork and discuss each term with a lawyer before signing anything. You should also consider your future plans. Co-signing a mortgage increases your apparent debt load, making it difficult to get approved for your own future loan. Furthermore, your credit score will suffer if the main borrower misses a payment. Most importantly, make sure that if you're forced to make payments toward the loan, it won't cripple your personal finances. If you're on the other side of the deal and are looking to ask someone to co-sign your mortgage, try to find someone with a high credit score, high income, and low debt. Approaching your bank with a less than ideal co-signer is essentially inviting more rejection. Moreover, it's important to recognize that this is a big favor to ask of someone. This transaction involves significant risk, so make sure to show sincere gratitude for their help. In the end, a mortgage co-sign is a great way to get approved for a mortgage when it would otherwise be impossible. Yet, if mismanaged, it will lead to negative consequences for everyone involved. If you're struggling to make a decision, reach out to one of our Platinum agents. We can help you review your options and guide you in buying the perfect home for yourself or a loved one. Thank you for watching another GT Homes exclusive. Remember to subscribe and to visit us at gtahomes.com.